Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of working through what happens if you've been assessed an FBAR penalty by the IRS. FBAR has been all the rage lately with a recent case up at the Supreme Court on the issue of non-willful FBAR penalties. That's the Bittner case. Increased enforcement of non-compliance. And since technically the FBAR is not a tax form, it works a little bit different. So let's work through, right? I always like to start out with the basics, make sure you're on the right presentation. FBAR, Foreign Bank and Financial Account Reporting, FinCEN Form 114. FinCEN refers to the Financial Crimes Enforcement Network, but of course, 99% of the time, FBAR has nothing to do with financial crimes. U.S. persons who have foreign bank and financial accounts, bank accounts, investment accounts, pension accounts, life insurance that has surrender value, they're required to report that information annually on the FinCEN Form 114. It's filed electronically. It's due on April 15th, but it's on what's referred to as automatic extension. That means you don't have to file like a Form 4868 or 7004. You automatically have until October to file the FBAR, but that can change every year. So it's important to double, triple check as you get closer to the April deadline, say in 2023. Now, when it comes to the FBAR penalty, it can work in lots of different ways. We are just focusing today on civil penalties. Primarily, they're non-willful. There's been definitely an uptick in the number of willful FBAR penalties, what qualifies as willful, reckless disregard, willful blindness. But let's just focus kind of on the basics, right? So, for those of you that are lucky at life, right, you may not get an assessment or even a proposed assessment. You may get a warning letter. It is a letter 3800, and it basically says, hey, you're supposed to file the FBAR, you haven't filed it, here's a warning, make sure you do it in the future. If you go through the Internal Revenue Manual, if you're that bored, you can get some more background on the idea that despite how ridiculous the penalties are, the idea of the penalty is to promote compliance. Non-willful penalties are relatively newer than willful penalties that have been around forever. That also takes me one other side point. FATCA is the Foreign Account Tax Compliance Act. It's similar to FBAR. FATCA has only been around, it showed up in 2012 on the 2011 tax return. A lot of the agreements began being entered into with the different countries in 2014. But the FBAR has been around since like 1970. So it's increased enforcement, especially with the introduction of FATCA, but it's been around for a while. It's not new. Okay, so if you're a lucky person, then you'll get the warning letter, and then you can take care of it. Otherwise, even before you're penalized or a proposed penalty, you may instead receive an FBAR audit or examination notice. Basically, you get audited for your tax return. Maybe you're a business consultant and you have your own business and you took too many deductions, or the IRS thinks you did, they audit you, right? Same thing with an FBAR. So you may have an FBAR audit. These are super, super important. The reason why is it's another opportunity to avoid a penalty, right? You should have representation. You can do it yourself, of course, right? But you should consider at least speaking with some board certified specialists wherever you're located at to get an idea of what to do, because it's your opportunity to avoid an assessed penalty. You may not be that lucky, right? So you may get one of several letters. Now, the 3709 is the pre-assessment letter. Okay, basically says, hey, this is what we plan on assessing against you. The 3708, you've been assessed. And the 3708A is you've been assessed after having an appeal. And we'll get to the appeal in a minute, but once you've already received either a proposed penalty or an actual assessed penalty, it's really important that you stay on top of it, right? If you've received the proposed, the 3709, of course it would go out of order because it's the IRS, but the 3709 is you haven't actually been assessed yet. So it's another opportunity to try to fight it. As with anything in life, it's easier to avoid the penalty than to get the penalty and try to abate it. Now, when it comes to either the 3709 or 3708, you have the opportunity to appeal, but you typically only get one bite at the apple. So let's say you do the 3709. Let's say you get the 3709 letter, pre-assessment, you do the appeal, doesn't work in your favor. then you get 3708, you don't get the chance to normally appeal again. There's exceptions and limitations and yada yada, but you typically don't get another shot at it. If it's been assessed, then you also get a Form 13448. That is basically the form notice letter that you will receive that where the IRS bases the ability to file a civil lawsuit against you for the assessed penalty. It's generally 2 years. There's also some exceptions for that if there's some criminal ancillary going on as well, but typically 2 years. If you've been assessed the FBAR penalty or proposed FBAR penalty, you have to really think about how you want to respond. Why? Because you only get one bite at the appeal apple. So, do you want to do it before? Do you want to do it after? Typically, you would do it before it's assessed, but there's pros and cons to each approach. If the appeal doesn't work out in your favor, you can always pay the amount and sue, or wait to get sued, defend, and counterclaim. Now, recently there was a case, I believe it was the Federal Court of Claims, Mendu, in which the court said, hey, since you can't take an FBAR penalty, assessed penalty case to tax court, we're also not going to require you to meet the floor rule. The floor rule basically says if you have a tax issue, you want to sue the IRS or U.S. government, you have to first pay it, request a refund, and then when that's denied, you go ahead and sue. In the case of Mendu, the petitioner didn't do that. He didn't prepay the full amount and was like, hey, I couldn't go to tax court. How can you say I can't go to tax court where I don't have to pay it up front? But if I want to go to federal court, I do have to pay it. So I don't get, and the IRS is the one enforcing it. So it's basically being enforced like a tax. I just don't get the ability to go to tax court like everyone else who has tax issues. And the court agreed. And so that's something to consider. You may not have to prepay. Before any of this happens, if you're out of compliance with foreign bank and financial account reporting, you may want to consider getting into compliance with one of the offshore amnesty programs. If you're willful, typically your only option is VDP, the Voluntary Disclosure Program. If you're non-willful, you have many more options available to you. You've got the streamlined procedures, domestic and foreign. They're both for offshore assets or foreign assets, but depending on whether you're a U.S. resident or not. There's delinquency procedures and reasonable cause as well. We have a ton of free information on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.